Hello guys, good morning, good afternoon, good evening, whenever and wherever you're watching this video from. I'm your friend Chiwe from Tech Academy. In this video, I'm going to show you how to prepare the balance sheet, okay, or how to draw up the balance sheet with the correct title using this past paper of 2018. Okay, 2018 grade 9 of course. So without wasting much of the time, let's jump right in and solve the question. So in the balance sheet, we always start with assets, fixed assets to be specific. So let's identify the fixed assets that are here. So the first one we have machinery. Machinery is a fixed asset, so we're going to start with. We have machinery. Office equipment is also a fixed asset. What else? Furniture is also a fixed asset. Then fixtures and fittings are also fixed assets. Okay, so we have identified four fixed assets. Let's now go to our solution. So this is what the table of the trial balance looks like. Okay, first we need to write the title. If you look at the question nicely here, the title is M. Silombo, all right, and then the date is 31st December 2016. So here the title will be M. Silumbu, okay, like this. M. Silumbu's balance sheet. Balance sheet. This one is prepared as at. Then the date 31st December 2016. That's all. That is the title. So the catch here is on as at here. This one is not prepared for as the year is ending. It is prepared as at, okay, a certain date. Now we have details here, cost, then this small column here is for Ngwe, all right? So we have depreciation here. If at all there was a loss in value of fixed assets, then you have net book value. Then net book value is the difference between the cost at which an item was purchased minus the loss in value. And then you come up with a net book value. Then you have the column for Ngwe as well this side. All right. So here, let's write like a title, fixed assets. Okay. The heading here, fixed assets. So under this heading, we're going to write the fixed assets that are here. Let's write them in the order of permanency by starting with the machinery. Okay, so we're going to write machinery. The cost of this machinery is 19,500. As you can see, it is 19,000 here, 500, 00 Ngwe. So in the cost here, we're going to write 19,500, 00 Ngwe. Was there a loss in value? No. So no loss in value. We're going to write the same amount this side as 19,000. 500 00 what 00 Ngwe, that side. Okay, then the next fixed asset here is office equipment. Okay, so we are going to write here office what? Office equipment. Office equipment. How much? Our office equipment was 12,000 here. 12,650. All right, so in the cost column, we're going to write 12,650. There was no loss in value, so no depreciation. The same amount, we're going to write it on here on the net book value as 12,650. Okay, we're still under our fixed assets because we've identified 4 of them. So we go to furniture, and the furniture is 16,500. Okay, so here we're going to write furniture, okay, which is 16,500. No loss in value, 16,000 what? 500. The same amount, 16,500. Then 00 away that side. Okay, the last fixed asset as identified earlier on is fixtures and fittings. Okay, fixtures and fittings. So we're going to write fixtures and fittings. Okay, fixtures and fittings. The cost here of fixtures and fittings is 13,550. Okay, 13,550. 00 ngwe, no loss in value. Okay, so here we're going to write the same amount, which is 13,500 what? 550. 00 ngwe. All right, then we are done. So after writing all the fixed assets, what you do is you add them. So here we're going to have the total fixed assets. Okay, total fixed assets. So we're going to draw a line here, a straight line up to this point. All right, then we're going to calculate. We're going to add here. Okay, so after punching all the numbers on the calculator, it's giving us 62,200. So we're going to write down here as 62,200. 00 ngwe. Okay, then even here on the net book value, we're going to write the same amount, 62,200, like this, guys. Then you draw a line, okay, like this, up to this point, showing that we are still using this value here. Okay, we have not closed. We've closed it here, but here we haven't closed because we need to use this value somewhere. Okay, then we go to current assets. Okay, so we're going to write current assets here. Current assets. Okay, then we go to our list and identify current assets. So identify current assets. So according to this list, let me just use a different color. So we have one, this one, stock is a current asset. Debtors are also current assets. What else here? Cash in hand is also a current what? Asset. So we only have 3. Okay, in this question we only have 3. So we're going to write the first one. We're going to start with the stock. Okay, this is the closing stock, of course, and it's 2,500. So here we're going to write stock. Okay, stock and the amount. So we write in the second column here. All right, or third column starting from, so this is the first one, second, then third, is 2,500. Okay, 2,500. 00 ngwe. Okay, So in the depreciation column, that's where we write the amount. And the next is debtors. Debtors. If you look at our list here, debtors is amount to 9,300. Okay, 9,300 here. Then the next is cash in hand. We don't have cash at bank, we just have bank overdraft, which is a current liability. Then we have cash in hand, all right, as 2438. So here we're going to write cash in hand. Okay, amount is 2438. 2438. Okay, like this. That's all according to our list. So we're going to add. Okay, so we're going to draw a line here, then add. So on the calculator, we're going to write 2,500 plus 9,300 plus 2438. So it's giving us 14,000. So we just write it down here. Okay, we don't take it and you don't take it anywhere. So it is 14,238.00 ngwe. This amount is called the total current assets. Total current assets. Okay, when you are done with the current assets, we go to current liabilities. Current liabilities we subtract, so we use less. So we're going to say less current liabilities. Okay, as the title here. Then we go to our list and check if at all we have liabilities, of which we have. We're going to use blue pen here to identify the current liabilities. So current liabilities, creditors are current liabilities. So we have one here, and bank overdraft. Okay, so according to this, we have two current liabilities. We have creditors and bank overdraft. So let's start with creditors. Okay, so we're going to write here creditors. Creditors, then the amount for creditors is 7,250. So we write in the second column here 7,250. 00 ngwe here. This is 7,000. Why writing this in the second column? Because we have more than one current liability. If it was just one here as creditors, this amount would have gone to the depreciation column here in the middle, okay, or in the third column, so that we subtract from what? We subtract it from the total current assets and come up with the working capital. So let's do the procedure step by step. We still have a bank overdraft here as another current liability. So we're going to write bank overdraft. Bank overdraft. So when you check nicely here, the amount for bank overdraft is 1,100. So we're going to write here 1,100 00 ngwe. Okay, that's all. Then we add. So when we add here, when you add 7,250 plus 1,100 is giving us 8,350, and the amount we bring it here in we bring the total in the depreciation column, or in the column where we have current assets, as 8,350. But what do we call this figure? We have added liabilities, so this one must be total current liabilities. Okay, now we are going to subtract, this from the total current assets. Okay, showing that you're subtracting, you're going to put this amount in brackets. So we're going to say 14,238 minus 8,350. So it's giving us 5,880. So this amount comes to the last column here as 5,888. Okay, not 80 but 88. So this amount here is called the working capital. Working capital. So when you're asked, what is the working capital? So the working capital, how the working capital is found or calculated, the working capital is the difference between all the current assets and the current what? Liabilities. What is this capital used for? This working capital is used for day-to-day running of the what? Of the business. Okay, let's move on. We are here. We have the working capital here. So what do? We add. We add the total fixed assets and the working capital. So when we add, we already have 5,888, and we are going to add it to total fixed assets, which is 62,200. Okay, and the total is going to give us, okay, wait, let's just wait a minute. The total is giving us 68,088. All right, what do we call this figure? This figure is called net assets. Okay, net assets. It's called net assets. So now, after net assets here, you are going to write something interesting. So we are done with this part, the first part of the balance sheet. Okay, not trial balance, but balance sheet. Then we are going to write financed by. Whatever we're going to calculate down here must be equal to 68,088. Okay, 880 kwacha. That's the whole essence of the balance sheet. So here we're going to write financed by. Okay, financed by. So this business is financed by capital. Okay, so we're going to start with the first one, capital. Then we're going to check on our list if at all we have capital, of which we should have. Yes, we have capital here as 65,900. 65,900. So let's just write it here. 65,900. Okay, 00 ngwe somewhere here. Okay, then we add the net profit. Now check in this examination question, since this question wasn't starting from the trading and profit and loss account, they just asked us direct to prepare the balance sheet. Then they have to provide the net profit. They have no choice but provide the net profit, of which they have here. It is the net profit as the first item here on the list. Net profit as 11,988. So you're going to write net profit here. Net profit as 11,988. 980 what? 988. Now, to this one, we're going to add also the long-term liability. Long-term liability, but let's first add these two. Okay, let's add the two. So when you punch on the calculator 65,900 plus 11,988 is giving me 77,888. Okay, all right. So let me just write this total this side as this 70 what? 77,888. Now to this total, we are going to add also loans. But before we write add loans or add long-term liabilities, we check on the list if at all we have a loan or a mortgage, any long-term liability. According to the list here, I can't see any long-term liability, starting from the net profit, machinery, then we have stock, debtors, office equipment, bank overdraft, drawings, creditors, furniture, cash in hand, capital, fixtures and fittings. We don't. Since we don't have long-term liabilities, we are going direct to subtract the drawings. So we're going to write less drawings. Okay? What are drawings? Drawings, this is the money or items that are taken out of the business by the owner. Okay? It is a credit of the owner to the business. Okay? If you have a business and you try to take something out, let's say you are in a grocery and you want to grocery business and you want to and you take some groceries from the business, you need to pay back the money, okay, to the business, because the proprietor and the business are two different entities. You are different. You are not the same as the business. The business is independent and you also supposed to be independent. So to avoid withdrawing unnecessary money from the business, you need to put yourself on a salary. So drawings here, we have drawings, of course. Drawings are 9,880. So 9,800 880, let me double check. Drawings 9,800, not 880, 9,800. Okay, like this. So we are subtracting, showing that we're subtracting. Let's put this in bracket. Okay, then let's subtract. So this total amount 77,880 minus 9,800 is giving me 68,000. So you write this one on the other side as 68,888. Okay, 68,088. So what do you call this figure? This figure is called capital employed. Capital employed. Capital employed. Now we've come to this interesting part now of this balance sheet. Check. Compare these net assets and the capital employed. Are they the same? According to this, the net assets we found 68,088 kwacha. Even here we found 68,088 kwacha, meaning our balance sheet has balanced. Then 20 marks is guaranteed according to the question which is here and which was given 20 marks. Okay, so you've gotten everything. That's how you prepare the balance sheet, guys. This is very simple with practice. Okay, you can solve this question, you can know how to solve this question, but if you are slow, okay, if you are not calculating within time, then you will probably not be able to finish on time during the exam. Okay, so that's how you prepare the balance sheet. Thank you so much.